going from $9 an hour to $1,000 a trade using draws in liquidity. By the way, this video will not work for you if you do not pay close attention. Put all your focus to this video. So in order for us to know where's draws in liquidity, how to spot them, you have to go to the hard time frames. So in this case, I'm at the 4-hour time frame. I could even go to a daily time frame to find more draws in liquidity. So draws in liquidity are these single candles that are so prominent, you can literally spot them even if you would have one eye, bro. Okay, you can literally see this, bro. This is a big candle on the higher time frame. This is a big candle. The wick is so huge, you can literally see it. This is a draw in liquidity. It's alone there, okay? The reason why this is so super powerful is because it has a lot of liquidity. It has a lot of liquid cash. Example, because if you would think, what do these big banks, hedge funds, market movers, what do they want to do? They want to take people out from the market. They make money from filling out orders. Now, when this bank moves the market, they see that there's a lot of liquidity, liquid cash laying there. So what do they want to do? They want to take liquidity and then move to the opposite direction. And literally, what happens? Boom. And I know this may not look like much, but guess what? If we go to the lower time frame, we can literally see this is 1,000 pips, or in some brokerages, it could be 10,000 pips. So this is huge. And to be precise, to show some proof, I made money from this yesterday. I made $1,000 yesterday from this trade. Let me show you. So right here, I was actually live trading with my members. So I said daily sell side got swept. Liquidity, huge amount of liquidity got swept. It was that I should show you. It was also a daily time frame sell side liquidity. So it is huge draw in liquidity. I just said that, okay? And I literally said in the stream that there's like 90% of chance it will go to the opposite direction. Once this shit gets hit, like there's a 90% chance that this shit will start to go up. I bought it. There we freaking go. I'm talking, bro. Look at this shit. And it did. So I placed buy positions and I made a ton of money. Everyone inside the Discord made bread. If you want to join for free, it's in the link in the description. But make sure to focus, okay? Focus right now, okay? Focus in this video. Look, if we see the draw in liquidity, for example, I went into the lower time frames because since it was a super huge draw in liquidity, I know there's so huge of a chance that the price will go to the opposite direction. And I literally said that in the stream. Everybody saw that and heard that. There's a 90% of the chance it will go to the opposite direction. It did that. That's the first time that that's the first sign that I see. I'll go to the lower time frames. I see that the price will start to reject from the liquidity area. It will start to go to the opposite direction. Here we see the first break of structure to the upside. Now, if you know something about the price, when the price moves down, it moves in a trend. Lower lows, lower highs, lower lows, lower highs, lower lows. In an uptrend, higher highs, higher lows, higher highs, higher lows, etc., etc. So in this case, we saw the liquidity. That's the first sign. We broke structure. Now what I'm waiting, this is the higher high. I'm waiting for a higher low. We see that. And then higher high, I enter. I enter from this new break of structure. I know that the trend has switched. We'll now look for buys. And right here, I entered below this mini order block right here. And where was my take profit? I can literally check that right now. 54325. So we can check that right here. So yeah, this was the trade. As you can see, nice 1-to-3 ratio. Everyone got paid. I got paid. And the reason, literally like I just told you, why did I take it? I took it from the draw in liquidity because the main mission of these banks, institutions, and hedge funds, they literally just want to take out liquidity, take people out from the market, and people also get into the markets in these draws in liquidity. Orders getting filled. What does that mean? Volume of the market will increase suddenly. Go to the 1 minute time frame. We can see how rapidly this starts to increase in volume. We can see that these are pretty small candles. It gets hit, big candle. Big candle. This moved all the way up here. Big candle, trend, big ass trend. And we can see that the trend actually switched. That's why I entered. This is the first sign. Higher high, higher low, higher high, higher low, higher high, higher low, etc. And that's what's up. Beautiful, beautiful uptrend, as you can see. And the thing here is, why are draws in liquidity so powerful? Because we were actually bearish before that. We were in a bearish downtrend, as you can see. Lower lows, lower highs, lower lows, lower highs, lower lows. Okay, here it goes a little bit up, fixed itself, and again lower lows, lower highs, lower lows. Guess what, guys? We were bearish, but we had the massive liquidity sweep that literally switches the bias, at least for some moment, okay? Because millions of people got out from the market, millions of people getting into the markets, massive amount of volume entering the markets, switch of the bias, and then we can enter to the opposite direction. Normally, we follow the trend, but draws in liquidity allows us to literally go to the opposite direction of the trend, and that is the beauty of it. Because why is that so nice? Because we can just literally mark out a lot of draws in liquidity here. For example, in here, this is a draw in liquidity right here, 4-hour time frame draw in liquidity. Also, this is also a draw in liquidity because this has a lot of liquidity. It's alone here, but this has more liquidity. And this is a draw in liquidity. This is a low. This also has liquidity, but this one is massive, bro. When this shit gets hit, I can guarantee it will start to go to the opposite direction. Obviously, do not enter like a dumbass like this. Some people get it wrong. They enter immediately when it gets hit. No, you have to go to the lower time frame, see more reaction, and then you can enter. But the thing here is, the beauty of the draws in liquidity, you can just mark it out and be ready. Like, motherfuckers just be blind and do not even look at this. They just be entering shorts and then they wonder why do they get stops out. The average retail trader, 95% of the traders do like this. They don't know where to draw in liquidity. They enter and boom, got swept, and then they got stopped out. They lose a lot of money and then they wonder why did they get stopped out. And then motherfuckers like me, motherfuckers in my Discord, we saw this a mile away. We saw this weeks ago, these draws in liquidity, and then we know that price will start to trend and switch the direction, and we make a ton of money and we do not become liquidity. Now obviously we do not enter immediately when we see the liquidity got swept. We enter from the reaction. But you feel me? It's like that. That's how it literally goes, and that's what I did right there. And I know. You may wonder like, oh, Moosh, this isn't even that big of a move up. Well, guess what? Guess what, guys? This is 1,000 pips in this broker. Other brokerages, it is 10,000 pips. Guess what, bro? I made 1 to 3 years to ratio trade from that. 1,000 bucks. Guess what, bro? Am I happy? Hell yeah, because I made money. Obviously, as a day trader, I don't really care do I lose or win, because I'm just numb in these markets nowadays. But I know I'm profitable and that's what I do. But if you know, draws in liquidity so important, and the more hard time frame the liquidity is, the more power and actual influence the liquidity, draw in liquidity will have. Because you have to understand, draws in liquidity, you can literally find them in every single time frame. If we see, bro, we can see a draw in liquidity. This is a mini draw in liquidity. This I know this looks weird, but this is a mini draw in liquidity. This is like a mini draw in liquidity. Okay, 1 minute draw in liquidity. The price doesn't care about it. Okay, a little bit maybe, but it closes above it. So, and also right here, this is a mini draw in liquidity. Price doesn't care about it. So I have to understand, higher time frames, they have more influence in these markets. Higher time frame always. That's why I always tell people, oh, you should go to the higher time frames and then you move down to the lower time frames. And guess what, guys? I have an exact video on that, how to do the top-down analysis, that you can find from the link in the description. And if you want to trade live with me and join the free Discord, you can join it from the link in the description. All right, peace out. Let me know what you thought about this video. Subscribe. Peace out.